In this video, I will share with you which secured credit cards is best for building your credit, and how to get the most out of these companies by making them work double duty to build your credit and your credit score fast.
Hey, do I have something to tell you?
Hello? Hello? Hello?
Blah, 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 yap, yap, yap.
Settle down.
Secured credit cards are often considered one of the best tools for building credit because they provide a structured way to establish or rebuild your credit history. 1. Credit reporting. Secured credit cards report your payments and credit usage to the major credit bureaus Equifax, Experian, and TransUnion. 2. Low risk for lenders. A secured credit card requires a cash deposit upfront, which serves as collateral for the credit limit. Whatever your savings deposit is, your credit limit will be the same. This reduces the risk for the card issuer, making it easier for individuals with no credit or poor credit to get approved. 3. Helps build a positive credit score. Your credit score is primarily influenced by your payment history and credit utilization since secured cards report your payment history and credit usage. Using them responsibly helps improve your credit score over time, allows credit flexibility. While a secured card requires a deposit, it works like a regular credit card. You can make purchases, pay off your balance in full each month, which is ideal, and even carry a balance if needed, though that's not recommended. This gives you the flexibility to manage your spending and credit use, credit limit increase. Some secured credit cards allow for a credit limit increase after you've demonstrated responsible use. This can help your credit score increase. Helps rebuild after mistakes. If you've had credit issues in the past, secured cards can help you rebuild your credit. As long as you make your payments on time and keep your balance low, transition to unsecured credit cards. After a period of responsible use, many issuers may offer to transition your secured card to an unsecured card, returning any funds in your savings account, less impact of denials. Since the issuer has collateral, they are more likely to approve individuals with little or poor credit history, making secured cards more accessible than traditional credit cards. In short, secured cards offer a relatively low-risk way to build or rebuild credit. Why credit-building loans may not be the best choice for rebuilding credit. While credit-building loans are designed to help establish or rebuild credit, they aren't always the ideal solution. Here's why: high interest rates and other charges. Credit-building loans often come with high interest rates and additional charges. For those already struggling with credit issues, these costs can create financial strain. The higher the interest, the more you'll pay over the life of the loan, making it harder to stay on track with your repayment plan. Limited impact on credit reporting. The effectiveness of a credit-building loan depends on whether the lender reports your activity to the major credit bureaus Experian, Equifax, and TransUnion. Unfortunately, not all lenders report to all three bureaus. If your loan isn't reported or doesn't affect your credit score, you won't reap the benefits you're aiming for. Upfront payment requirement. Some credit-building loans require an initial deposit or involve a forced savings component. This means your loan payments are held in a savings account, only accessible once the loan is fully repaid. This setup can be restrictive, as your funds are tied up for an extended period. A secured credit card could offer a more flexible alternative with similar credit-building benefits. 4. Debt cycle risk. If you are already in a tough financial spot, taking on a credit-building loan may just add to your debt without giving you enough flexibility. Rebuilding credit often requires a combination of low debt and timely payments. Adding another loan without the capacity to manage it may put you in a cycle of debt, which can hurt your finances further. 5. Slow results. Credit-building loans typically involve small loan amounts that are paid over months or even years. While they can help improve your payment history, they usually don't offer the same immediate impact on your credit score as using a credit card responsibly or reducing high credit card debt. The slower buildup may be discouraging for people looking for faster results. 6. Restricted access to funds. Because the idea behind a credit building loan is to pay back the loan before you access the funds, it doesn't give you the flexibility to use the money for anything else. For some, this restricted access might be less helpful compared to a secured card or other forms of credit. 7. Negative impact of missed payments. Missing payments on a credit building loan can severely damage your credit. If you miss payments or default on the loan, you could be setting back your credit repair progress rather than improving it. The structure of credit building loans often doesn't offer much flexibility in case of financial hardship. In conclusion, credit building loans can be effective for some individuals, particularly if they have limited options, but they may not always be the best choice. The high costs, slow progress, and restrictive nature of these loans can make them less effective than other credit building tools. Alternatives like secured credit cards or credit builder programs that report to the credit bureaus are often more flexible and less financially burdensome. Additionally, with a credit building loan, you can't access the money until the loan is paid off, which makes it similar to a certificate of deposit or an IRA, unlike CDs and IRAs, which are designed to earn interest for you. You are required to pay interest on the loan while you cannot access the funds. To boost your credit score rapidly, with a secured credit card, it's essential to follow these strategies. 1. Identify which secured credit cards to avoid and select those that align with your financial goals. 2. Properly establish your account to maximize benefits. 3. Approach the secured credit card application as you would an unsecured one. Ensure your income is substantial and your debt is minimal. 4. Keep your card usage low and aim to pay off the balance in full each month to avoid interest charges. 5. To determine your income for the application, calculate your total monthly debt, multiply it by 3, and then by 12. Use this figure unless your actual income is higher. By adhering to these steps, you can make the most out of your secured credit card and accelerate your credit score growth. Key factors in choosing the right secured credit card. 1. Opt for a higher maximum deposit. Seek a secured credit card with a maximum deposit limit of $5,000. A credit limit of $5,000 mirrors that of a standard credit card, making it ideal for boosting your credit score. As you make additional deposits, it appears as though the issuer is increasing your credit line, which positively impacts your credit score. 2. Start with a minimum deposit of $1,000. Avoid secured credit cards with limits below $1,000. Here's why. When lenders review your credit report, they assess your highest credit limit. If your limit is only $500, no matter how diligently you've paid off your balance or how long you've held the card, the $500 will reflect as your highest credit line and the most you've ever paid off. This won't help when applying for larger loans such as a $200,000 mortgage or a $20,000 car loan. The difference between a $500 limit and the cost of major purchases is significant. By starting with a higher deposit and gradually increasing it, you can build a stronger credit profile and improve your chances of securing larger loans in the future. Believe it or not, finance companies also base what you can buy on credit against how much you have paid off in the lifetime of your credit history. This is one of the factors, along with how long you have been on your job, your annual salary, your debt-to-income ratio, and your credit score. Now here is where the magic happens. Once every 6 months, you need to deposit $500 into your credit card savings account. Every time you deposit money in your savings account, your credit limit on the secured card goes up by that much. You can deposit more if you have it, so save up. It will reflect in your credit report as a credit limit increase, which will make your credit score go up along with your on-time monthly payments. This also covers, protects, and guarantee your credit limit increase from the company goes through. In other words, if the credit card company is slow in giving you credit limit increases after keeping your account in good standing, you give yourself credit limit increases. After your credit score reaches 775 or more, you can start looking for an unsecured credit card, keeping your credit score skyrocketing. Note to you, please remember that throughout this process, you need to treat your secured credit cards like unsecured credit cards. If you want more helpful financial tidbits, hit the subscribe button so you don't miss out on helpful information. Let's work together to live better and always, thank you for watching.